our next topic, which is the next big thing in fintech. 1 trillion Bnpl boom. Thanks to the onset of accelerated growth in e-commerce coupled with the financial uncertainty due to the pandemic, Bnpl has become an appealing payment option for consumers who are looking for financing options with more convenient alternative payment methods, myself included. Tune in as our panelists discuss the impacts of Bnpl services within communities where many might still be struggling to get back on their feet. Is this a short-term measure or a long-term gain? Join the dialogue to find out. Our panelists are, we've got Ian Au, founder and CEO of Ablr, Sumit Kumar, partner and managing director of BCG, Conor Lynch, head of consumer solutions of APAC Visa, and Amra Naidu, who is the moderator, co-founder, and general partner of Accelerating Asia. I look forward to hearing this whole conversation, and everyone else, please take notes. Enjoy.
Thank you so much, Lenora. Hi, everyone, and thank you for taking the time to join us today, and a big warm welcome to today's session. So my name is Amra Naidu. As mentioned, I am the moderator for today's session, but today is not about me. It's about our 3 wonderful speakers that are joining us today. Please join me in welcoming Ian Au, the founder and CEO of Ablr, Sumit Kumar, partner and managing director at BCG, and Conor Lynch, the head of consumer solutions APAC at Visa. So we have a really short time to get into a lot of different things here, just under 30 minutes for this action-packed panel, with speakers representing a cross-section of stakeholders in the fintech ecosystem. I'd also like to remind you that there is an opportunity for Q&A. So if you do have any questions, I will be monitoring the Q&A section. So feel free to drop your questions in there and we'll try to get to them at the end of the session. So into our topic today, despite the, buy now, pay later space being a relatively new category in Southeast Asia, it is absolutely booming, with expectations for it to grow from 7.3 billion in 2019 to a whopping 33.6 billion in 2027. And I think we know that there are a lot of different factors that have accelerated this growth, with it becoming a very appealing payment option for consumers. So I want to throw the floor over to our first speaker, Sumit. So I was also reading that the buy now, pay later space is going to more than double in terms of the amount of services that are available between now and 2024. However, the industry is kind of yet to turn a profit. You've been involved in financial institution practice at BCG, and you've worked extensively with a number of clients in the retail and SME banking space. What do you think about this, and just how big can the buy now, pay later space be?
So thank you, Amra, for asking that question, right? So look, I think it's very interesting, and if you really look at the buy now, pay later space, right, there are lots of big names out there, right? Be it people like Afterpay or Klarna or Affirm, who are making like huge valuations, but look at the money that they make and the kind of profits that they make and the ROE, it's all negative, right? Now, we at BCG will definitely look at what goes in this business and how do you make money. The reality is there are players who are making money in this space. They are small, right? There are players like Liqui Loans in India, which make money. There's a player called Mocha in Central Europe, which make money, right? And what differentiates a player who makes money and who does not make money is clearly 2 things, right? One is the business model in which you are operating. So one of the key levers in this business is to actually able to manage risk properly, right? And I'll give you a simple example from Southeast Asia, right? So there are players in Southeast Asia who have tried buy now, pay later and have seen risks and NPLs 15% plus because they're not doing the risk assessment properly, right? So doing right risk assessment is very, very critical for you to make this as buy now, pay later. Otherwise, it can become buy now and pay never. And a lot of players are seeing that, right? So one is that. And how do you do that, right? So one of the ways to do that is really understand which merchants, which customer segments you go after and how do you assess risk, right? Because the decision is very quick. The second important factor that you need to think of is how do you generate revenue in this business? If it's all coming from the merchant, you will not succeed because the competition, the merchant will give less and less. So you need to think of other sources, right? Which is consumer lending, advertising revenue, and players are always going in that direction, right? So really diversifying your revenue source and managing your risk is the secret for you to make money in this business, right? And there are players who have done it.
I love that answer. And Conor, so I want to throw over to you for a little, I guess a quick second. You lead a team that manages credit, debit, prepaid, and loyalty products at Visa. So what do you think of this space? And I guess a follow-on question to that is, will the growth of buy now, pay later solutions come at the expense of credit cards? We've seen a lot of, talk about this. I think the Reserve Bank of Australia said that the number of credit cards in Australia fell by 6.6%. So is this related to the space? Are there other factors at play? It would be really great to hear your thoughts on this.
Amr, there's a lot to say about that question. So I would actually pile on with what Sumit was saying, as in addition to his point about risk management, I think there is also regulation that as the sector gets bigger and more successful, regulators are going to become more and more interested, and that sort of puts a brake on a certain level of innovation. And funding is also like asset funding is going to be important, where they get the money that they lend to consumers from. Again, as they grow bigger, it's going to become less and less sustainable for it to be at market rates, etc. But anyway, leaving those 2 points aside, will it come at the expense of credit cards? Maybe. I think one of the things that we probably should acknowledge is that buy now, pay later, and I know we all have a very specific use case in mind when we use that term, but actually buying something now and paying for it later is as old as the hills. It's as old as when people started selling things to people who wanted to buy them. They often offered them on terms and allowed them to pay later. And unsecured consumer credit is really what we're talking about. Buy now, pay later, the consumer experience is a really good idea. And it shows the value of fintech and the value of fresh thinking when applied to financial services. So I would say, Amr, that rather than coming at the expense of traditional credit cards, it probably will end up helping credit cards become a much better consumer experience. First thing. Second thing, it also makes financial services and networks like Visa wake up and realize that there are people there are segments of consumers outside of those who traditionally be in the market for a credit card and who go to a bank, be it via the website or via the branch, and get out a credit card. There are people other than those who are credit worthy, who want to use credit, who want to buy stuff and pay for it later. And we need to develop as an industry a solution that helps those people meet their payment needs. All of that means that probably credit cards, and I don't just mean like the traditional plastic card in the way that we issue them today, but some form of financial institution credit extension is inevitably going to catch up with some of the fintechs that are out there really making headway in introducing this new experience to consumers and to merchants.
Yeah, I mean, you made some really good points there. I'm really interested in financial inclusion, and I think that's essentially what you're talking about here, is that there's a lot of opportunity to provide these kind of services to people who weren't really, involved in the whole market or segment before. So Ian, you are our official startup representative on this panel. Obviously, as a startup advocate, I don't want you to miss a good opportunity to tell people about what you do. So maybe we can kick off by you just taking a minute to give us a quick overview about Ablr and what makes you different from other buy now, pay later solutions. And I think in particular, I saw in your description that you describe Ablr as being on a mission to humanize financial services that improve people's lives. So if you could talk about what that means to you as well, that would be great.
Thank you, Amra. My fellow panelists, Sumit, Conor, and everyone present today. My name is Ian. I'm the founder and CEO of Ablr. So with regards to the Ablr is a platform that enables businesses with their ability to allow their customers to pay for goods and services over a flexible period of time with no hidden or late fees, thereby accelerating conversion and average basket sizes for businesses. in the industry that's now commonly referred to as buy now, pay later. We are a strong believer in the tech for good movement, and we take an empathy-led approach in utilizing technology, data, and design to develop better solutions that help businesses and consumers. And we are also working on advancing the financial services industry and creating a strong positive social impact on society. So when we talk about humanizing financial services, we're talking about starting from the impact on society and working backwards to look at and envision what that product looks like. Yeah.
That's great. Thank you. And I guess, when we're talking about the size of the market here, I don't think I've used buy now, pay later yet, definitely on credit cards. But about 60% of consumers say that they're likely to use buy now, pay later solutions over the next couple of months. We spoke a little bit about how fintechs are capturing a lot of the value in that space, banks being a little bit slower to respond. I guess maybe Sumit, if you would like to take this one, as an early pioneer in the space, why are banks a little bit slower on responding to this?
So I think it's a very good question, Amran. I talk to a lot of my clients, right? And I think I would say I've talked to like over 10 banks in the region, right? And I think my summary is three things, right? What makes it difficult for banks, right? So the first thing, right? Banks are far more regulated than fintechs, right? And look at what is happening today in this whole industry, right? I mean, Conor made that point, right? We are really playing in the edge of the regulation, right? And I think banks are super scared to get into that space where you are actually able to give credit line to someone. Like in Malaysia, I copy my card and I get a line, right? In like 60 seconds, right? Or 2 minutes. Banks cannot do that under their current regulatory framework, right? They're super scared to do it, right? So the whole regulatory point is something which is kind of tricky for a bank. Even if banks are thinking to do it, they're thinking it through their fintech arms, right? I mean, a lot of banks in Malaysia, for example, CIMB has touch and go. So they're thinking it through their fintech arms, right? The second thing, the reason why banks are a bit laggard in this is because, to do this, you require a bit of non-traditional way of doing credit. Banks are very used to traditional credit. Give me your salary statement, give me your EPF statement, I need so many documents, right? How is this lending happening, right? We're using alternate credit data, right? We're willing to take risks. We are willing to actually, forego some of the risks and really make business out of it, right? So that's the second thing. The third point is again very aligned to what Conor said, right? Where is the cost of fund of this business coming from? It's all the PEVC money, right? Like that is kind of subsidizing this business today, right? And which I don't think banks have the advantage to actually subsidize that. Although banks do have low cost of fund because they have CASA, which none of the Bnpl players have, but they also have responsibility towards their CASA and where they deploy it, right? So those are the three things. And the last point which I would lay out is, like any fintech, right? When a bank has to compete, they need to be more agile in terms of talent, in terms of technology, in terms of delivering great UI UX. Banks are not set up for that. Banks don't have the right talent for that, and hence they struggle on it.
Yeah, I mean, I think that's a whole other topic that we can definitely get into a debate about is, PEVCs subsidizing business models. That's a whole other area. So, I mean, Conor, from your perspective, what do you think, buy now, pay later solutions bring to the table for merchants and consumers in Southeast Asia? And I guess, similar to what you touched on earlier, or maybe building upon that, how do you see, credit cards and buy now, pay later solutions kind of working together in the future?
Right. Well, answering your first question first, I mean, I think it's been proven that in other parts of the world, certainly that Bnpl and the ability for consumers to spread their payments over a relatively short period does actually act to increase sales. And there's sort of a medium-term benefit for merchants for that. I mean, eventually the system will consume that, and you won't be able to get further increments after the first couple of years. But for a while, that will be a benefit to merchants. And it's also truly beneficial to those people that we talked about earlier that are outside the traditional credit card segments. They'll be able to buy now and pay later. They'll be able to spread their payments and manage their money much more efficiently. They will need to like proactively manage their money, of course, same as any of us, right? So there's potential for over-indebtedness and stuff like that, which could also involve regulation in due course if that happens. But I see benefits, genuine benefits for both consumers and merchants in the buy now, pay later sort of phenomenon. Your second question is super interesting. So like one of the things we've done in Malaysia 2 months ago is we launched a Visa installments with HSBC. And that's on credit cards, and it allows HSBC credit card holders to spread their payments over installments, aka buy now, pay later, on a credit card. What we want to do is really proliferate that solution within Malaysia, in other markets, expand it out from credit to include debit, because some people may not be credit eligible in the traditional sense. And even make it available so that people can pay for goods that they buy on foreign websites and when they're outside their home country on a buy now, pay later basis. So I really feel like, as I was saying earlier, I probably wasn't very clear. I think buy now, pay later kind of forces the pace in improving what the consumer experience of credit cards is. And I really think that's how the industry as a whole is going to benefit, because the Bnpl is actually a good customer experience.
Yeah. And what about you, Ian? Do you see banks or I guess credit cards as a potential threat to your growth? Why or why not?
Yeah, we don't actually see banks or credit cards as a competitor or a threat to our product. In fact, while Bnpl is a relatively newer product and we have had a head start, we are seeing more banks entering the space, like what Conor had just shared, as well as the Sumit. And they are either offering their own buy now, pay later, or they're partnering with buy now, pay laters. So at Ablr, we take a collaborative approach to this, in line with what Conor had mentioned also about regulation that might be oncoming, as well as some of the points with regards to access or cost of funding that Sumit mentioned. We take a collaborative approach to look at how we can work together with financial institutions, including banks. And we have been approached by a couple of stakeholders in partnering to actually advance the industry and create better products together, rather than seeing it as a, us against them. Yeah.
And I guess, following on from something that we spoke about earlier, which is, what Sumit mentioned about business models and, how this industry can be profitable. Ian, can you tell us a little bit? I mean, obviously, you don't want to reveal any state secrets here, I assume, but can you tell us a little bit about your business model? And also in particular, and this probably comes from the impact side of things, because you are very much, talking about improving people's lives. How do you make money and stay true to that mission at the same time,
Right. I think with regards to that, there's some points that was touched on previously. Sumit mentioned things about risk assessment, and that's also about the structuring. So at Ablr, sustainability is at the forefront for us with regards to providing access to the product. As such, we do the necessary assessments with the objective that access should be provided in an appropriate manner, while relevant features and controls are in place to prevent issues such as, taking on too much credit. And we have designed these programs together with financial education, so that you provide the access together with the financial education to improve the literacy to use these products better. So that's one aspect of it. The other part is that buy now, pay later can be a profitable business, as Sumit had mentioned, and it really depends on how you structure the product and whether sufficient value is created for the stakeholders, be it the merchant and or the consumer, and how that value is being captured after that.
Yeah, I mean, could you talk a little bit more about the financial literacy side of things? Because I think this is something that yes, to an extent is a potential issue with credit cards as well, right? But you have to jump through a lot of hoops to get through a credit card. How are you mitigating that on, for Ablr?
Yeah, so how we would like to approach that is that there's a lot of talk about buy now, pay later, approaching a certain demographic or, with a younger demographic. But what we really see here is an opportunity to provide a product that these consumers or this demographic would prefer or is used to. So I use the analogy of, in the past, we might be familiar with platforms such as, Facebook, and, the younger demographic are talking about things like TikTok. So they just have a different way of consuming certain services that's relevant to the time that they're in. So what we are doing is that by looking at this demographic, we're looking at how they consume financial services, how they consume credit, and how we can use that as a starting point, couple that with education, and enable them to actually learn about what credit is about, and how to use it in a sustainable manner. So one example of this is that as opposed to the difference between the credit card where you might not have to make any payment upfront, the buy now, pay later product can be seen as a budgeting tool, because you actually have to commit to a payment. I'm buying something for $90. I have to pay $30 today and $30 over the next 2 months. So it's also partly a budgeting tool to say that before I make this purchase, I'm going to pay $30 today and $30 over the next 2 months. So that's also another angle that, you can put all of them together to make it a better product.
Yeah, I mean, I think I graduated university without really having any financial literacy until I had to start managing my own payments. And that's something that is definitely, definitely something that can be improved upon. Sumit, I'd like to go back to you here, because this is something that we were talking about over, WhatsApp. You put the question forward. So, when we talk about managing risk and also, financial literacy, these payments for consumers can seem relatively small, but obviously it's very easy to rack up a lot of debt, especially with, I'm just scrolling around on Sephora before this panel, and it's very easy to buy a couple of $1,000s worth of makeup. What do you think about this, and how have you seen other, buy now, pay later companies mitigating this risk?
It's a very good question, and we did a lot of consumer research actually to understand how does a consumer think about these solutions, right? And I pretty much understand what Ian is saying, right? So, how are credit cards sold? When a credit card is sold, look, you buy something, you have to at minimum pay 5%, rest of it you can pay later. That's exactly how credit cards are sold in the market. What are we telling the consumer? You just have to pay $5 and rest you can keep paying later, right? And there's some little interest. Buy now, pay later is slightly different. It actually tells you you're buying for $1,000 now, pay $300 now, pay $300 in 2 weeks from now, pay $300 in 2 weeks from now. You are doing complete clear contracting to the customer on when are you expected to pay. And that is the difference between a buy now, pay later and a credit card. And hence, I actually think that buy now, pay later is not going to screw up, people loading up debt, because you are giving transparency to people on when is payment expected, versus a credit card which says, look, you can pay later, you just need to keep paying me 5% every month.
Less clear, yeah.
Message. And that is why I don't feel it's a major issue. And again, the reason why you see defaults in buy now, pay later is less to do with the fact that the customer is not able to pay. It's more the customer is being naughty here, yeah? And he's really defaulting because he intended to default. It's not inability to pay. He planned to default on it because you chose the wrong customer who actually is not going to pay you. So
I like that.
Very, very different in terms of how products are.
Yeah, it's an interesting way to look at it. And it's definitely not something, when you're reading all of these media articles about the buy now, pay later space, it's definitely not something that they're talking about. And I guess, Conor, over to you. So, there's this as well. And then I think there's also a lot of talk about, buy now, pay later solutions targeting a certain demographic as well. What do you think about that? Do you think that there's a difference between the demographic that credit cards are targeting versus, these Bnpl solutions? And what do you think about Sumit's response as well?
Well, actually, I agree with what Sumit said. So one of the key areas of attraction of BNPL is the clarity in terms of repayment terms and the kind of certainty it gives you as a buyer, especially if you're less familiar with how to leverage credit cards for your own benefit. Because, credit cards traditionally, they're actually buy now, pay later as well. You do get 60 days or whatever of interest free. And if you pay it all off, then actually you're doing well. But to Sumit's point, many people don't do that, and it becomes less clear and harder to manage for them than a BNPL type proposition. But I think both of them, to your question about the segments, I think both of them live together. So our research shows that yes, indeed, millennials and Gen Z, etc., are those that are most initially attracted by BNPL. Because of the clarity it provides them and the kind of manageability, easier manageability it gives them, because it's easier for them to get access to BNPL than a traditional credit card. But older, arguably, and more wealthier, let's say, consumers, and therefore, in the eyes of a traditional bank, probably more credit worthy, are also, think about it, we're all human beings. We all want clarity and manageability over our finance. And our research shows that when it's presented to them in the right way, and crucially, when it's offered to them by the right sort of institution or lender, BNPL is attractive to other older people in different sorts of segments than the most obvious ones that you consider that BNPL appeals to. So I really think that BNPL has a long-term future. Who delivers it and how it's delivered is what might change over time.
Yeah, I think that's a fair point. I am conscious that we have just under 10 minutes left, and we do have quite a few questions rolling in from the audience that are listening. So I do want to take some time and jump over to them. So I think the first one here is, what are innovations in consumer protections that you see as BNPL heats up? And this may be, I don't know, Sumit, Conor, would you like to take this?
Sure. So we were able to, one of the things that we're working on, I'll jump straight in, is a scoring model. So obviously, Visa sees a lot of transactions and is able to create data models off the back of it. And where Visa is involved in the transactions, we're able to create a scoring model to help, fintechs who maybe don't have access to those current accounts and to the day-to-day payments and the behaviors and the salary details that Sumit referred to earlier, and therefore need, some reliable data to be able to manage their credit scoring and help manage risk on an ongoing basis. So that's one thing we're doing, and the idea is that will help fintechs that aren't banks get a better handle on how these consumers are behaving, how they fund the BNPL transactions, so that they're better able to understand what level of credit to extend to the consumer, when to add to it, when to take away from it, that sort of thing.
Let's add, Amra, one more point, right? I mean, the consumer protection point is around 2 points, right? One is identity theft, which means you are screwed because the KYC process is super simple and somebody can just steal your identity. And second is, you're over leveraging yourself, right? I think Conor talked about the over leveraging point, right? I think on the identity theft part, I actually feel that there will be clear regulation in that very soon, right? In terms of what is the minimum KYC required, right? Because you cannot just take a photo of a KTP or a My Card and get an account, right? I mean, I can just get that photo from anywhere, right? You need to do some video check, stillness check. So I think those things will come, because I think identity theft is one big issue in this, right? And there's a lot of that in Australia, in UK, and I think there will be standards on that, right? Because that for me is most worrying, right? Because I did not apply for it. Somebody took it on my behalf and went and spent it, right?
Oh my goodness. Ian, there's a question here, which I think would be great for you to answer, which is, how do BNPL solution or models in Southeast Asia differ or are similar to solutions that are overseas? So, I mean, you decided to set up in Singapore. Why is that? What do you see the opportunity here?
Right. I think there are different approaches to looking at it, right? I mean, I'm Singaporean, so that's one of the reasons why we started in Singapore. Singapore's a great place, with regards to fintechs. The government's very supportive of that. The other thing with regards to, the model is that I think the use case in the developing country and the developed country is also slightly different from what we have experienced. So in a developed country like Singapore, you might have these people that are using it because they're looking for a better product. But in developing countries, there are also use cases where people are actually using it because they are either underserved or unserved in terms of having access to these financial services. So I think the use cases differ between the developing and the developed country.
Yeah. And earlier in the conversation, we spoke a little bit about regulation. And so there's a question that's come in here as well about, regulators putting in interest rate caps and how that might have an impact on BNPL in Southeast Asia. Does anyone want to take this one?
I'm happy to take a quick go, right? First of all, look, I think the classic BNPL, which is pay in 4 model, right, has no interest rate, right? The merchant funds it, right? So there is no interest rate. It's a factoring business. So anyways, it's covered under factoring. There's no interest rate, right? Now, if you go and look at the longer duration, right, the 6-month, 12-month, 18-month, I mean, that space is a very interesting space, right? Because you have P2P lenders, you have all kinds of unsecured lenders, right? So I think the question is, how much is the government willing to regulate that and put a cap, right? And for me, in the end, the industry will evolve, right? I mean, and you look at different countries, right? In Indonesia, still you are charging micro loans at like 30% interest rate, right? With that kind of interest rate, you can easily make money in BNPL, right? So I think I don't see that impacting too much in this part of the world. And even with whatever the government does, the industry will be robust enough to actually evolve. That's my personal view, given what the government are doing at this point of time.
Yeah. And I mean, it seems to me, as obviously someone who's not in the industry, that there's been a lot of myths about, or misconceptions rather, about what BNPL is and what it could, the opportunity that it is for people. I just wanted to do, I guess, a little round robin in the current, few minutes that we have left. Is there anything that you wanted to leave with the people who are listening here today? Any myths that you wanted to bust, or anything that is top of mind that you think that, it's really important that people understand about this industry? Maybe Conor, would you like to go first?
Sure. I mean, the first thing I'd say is that I'd say a couple of things in answer to that, actually. BNPL, there seems to be a perception among some people that BNPL is sort of a flash in the pan, it'll go away after a while. I disagree. I think the experience is here to stay. It's a superior way in certain circumstances and for certain segments to manage their payments and to get access to credit. So I think it's here to stay. The other myth is that BNPL providers are going to take over and they're going to cause banks to go out of business. Unfortunately, I think the way of the world is that it's more likely that the two will become more closely aligned, and to the point Ian was making earlier, there'll be a lot more collaboration than aggressive and nasty competition between them. And ultimately, I think those 2 points are a good thing. I mean, for consumers, BNPL is good. And if banks are able to improve the proposition they deliver to consumers, and on the other hand, if fintechs are going to be able to be more robust as a result of collaboration with banks, I think ultimately it's for the good that it continues.
And Sumit, any final thoughts?
The biggest myth is, I think BNPL is not a $1 trillion industry. It could be even 10 times of that. And I'll tell you why. Everybody is thinking of BNPL as an online play. We all need to remember today, 88% of trade in Southeast Asia is offline. And when people crack that, this could go crazy. And I think players are not thinking about it in the right manner. Everybody's trying to fight online space. I think the offline space is a clear space which we need to go after.
Hey, look, I would actually say something on top of what Sumit is saying, that in a country like Brazil, where because of the setup in that country, installments and BNPL has been a core part of how you do credit cards in that country for like around 30 years. 65% of consumers who use credit cards pay using BNPL facilities. It's a totally normal thing. So I would say that happening over time.
Latin America leads in the BNPL. Nobody knows in this, right? Latin America has been doing it for the last 30 years.
Yeah.
And Ian, in the final few seconds that we have, any thoughts?
Yeah, I'd like to add that, there's always this myth that, BNPL would bring about an onset of debt problems targeted at younger generations who are not so financially savvy. But I think we have to take a step back from just looking at BNPL in isolation. Today, the same younger generation and demographics have access to credit products from incumbents and existing institutions in the broader financial services industry. The focus here really, and I bring us back to the outcomes-based approach from the use of these products, whichever they might be. At Ablr, we have designed our product to be transparent in showing all the terms of the payment plan upfront in a way that's easy to understand, and users never pay more than what they have agreed upfront at the point of purchase. So what this means is that we've tried to structure our product to actually help those who might not be as financially savvy, and to ensure from outcomes-based perspective that they are better off using our product and using Ablr.
So I don't think I could have summarized this topic any better than the three of you just have done. And with that, we are out of time today, but I'd like to thank you so much for your time, Conor, Sumit, Ian. Thank you to the Wild Digital team for having us on board, and to everybody watching today, I hope you enjoyed today's session.